A warm welcome to you, my dear children. Welcome back to Business and Accounting Studies, the Accounting Studies part. We started accounting the part few sessions back, and we are now at the second lesson in accounting, not in the textbook topics lineup. In the textbook topics lineup, we are in 5th unit, unit number 5, but that unit number 5, is the second accounting lesson in your syllabus. First accounting lesson is unit number 4, that is Introduction to Accounting, and now unit number 5, last part, right? Children, you may remember that in the previous session, we talked about the accounting equation. We discussed, you learned how the accounting equation is constructed, how it is developed, how it is made. And you, with me, we did some exercises to see what is the relationship between assets, capital, to see what is the relationship between assets, capital and liabilities. That is right. Assets, capital and liabilities, the relationship between these three. I explained to you what relationship exists in between assets, liabilities and capital, right? So on the board we did a number of exercises. Can you tell me now what equation exists, or what equation should be used in a business organization where there's only owner's resources exist, where owner's resources only exist, and that only is sufficient to run the business, and where there is no external liabilities, no borrowings. What equation exists? Tell me. Let's see, children, how clearly you remember the versions of the accounting equation. In the previous session, I told you that there is one simple, the simplest version of the accounting equation, the simplest version, right? That is what I'm asking you now, where the business has only the owner's resources. In other words, which means the owner only has invested resources, his resources, and he has started the business without the aid, without the support of any external liabilities. In that case, the business has which accounting equation applies? No, I'm expecting the answer from you. I'm not going to write. You're going to tell me. What is the accounting equation? Is it assets equals capital? Is that what you said? Yes, that's correct. Very good. Assets equals capital. That is the accounting equation. When only owner's resources exist in the business, assets are equal to capital, or we can say assets equals equity. Equity means capital, and we know Equity means capital, that we already know. Assets equals capital. Assets equals capital. This is the equation. Right. But when there is more resources in the business, the resources which have been borrowed from external parties, when there are resources which have been borrowed from external parties, well, simply saying, if there is any loan taken from a bank, if the business has taken a loan and invested that money to the business, if the business has borrowed any other funds from any other persons and invested that money also into the business, or if the business has purchased goods on credit and brought them to the business, in such a case, the equation changes. The equation changes this way. How does the equation changes? Assets equals, now it changes to assets equals equity plus liabilities. That's how the equation changes, right? Yeah, you know that we did these things. Yes, children? Yes? Yes. Did anyone say no? We did, children. We did. In the previous session, you must watch the previous session to understand these things. But even in this point of time, even at this moment, if you pay attention, you can understand this. It's a very simple equation. Assets becomes equal to equity and liabilities. Right? Assets becomes equal to equity and liabilities because all the assets in the business are either invested by the owner or invested by external parties as borrowings, right? So when owners' resources and resources invested by external parties, when these two get together, it forms total assets of the business. Total assets of the business are formed in this manner. Looking at this equation, you can at once understand how the equation shows the ownership of assets. At once you can understand how this equation shows the ownership of assets. That is what the equation shows, children. That's right. So, moving on to what we have to cover today. What do we have to cover today? All right. It's shown on the screen now. If you wonder what this means, I'll just tell you straightforward. Now, children, the equation you learned is going to change. No, don't worry. Elements don't change. The elements, no, the elements do not change. Assets will be there, capital will be there, liabilities will be there, but the values of these assets, capital and liabilities is gonna change. That's what you're gonna learn in this session with me. How transactions affect accounting equation. Okay, this should be E because we are talking about the effect. We are talking about the effect, right? So it should be effect. How transactions affect the accounting equation. Children, you know what transactions are. Do you want me to explain again what transactions are? No need, right? It was explained very well in the previous sessions. Transactions are exchanging of resources. Exchanging of resources with various parties. When the business exchange resources with various parties, those events are called transactions. To make it very clear to you, if we buy goods from external party, from a supplier, that is a transaction. If we sell goods to a customer, that is a transaction. We pay a salary to an employee who's working in the business, that is a transaction. We pay the electricity bill, that is a transaction. All the exchanging of resources with various parties. Those are transactions. And children, due to these transactions, every day the assets in the business and the values of assets change. They change. The values of assets, they change. Right? Cash. The business has cash, and that is an asset. Cash, which is in the business, change. Cash amount goes down, cash amount goes up. Again, cash goes down, again goes up. Because of transactions. Right? You can understand that, right? If we perform a transaction as a business, as the owner, I'm standing right here, and let's say I'm carrying out a retail shop, a grocery shop, and this lorry, the distribution lorry of, let's say, Unilever, or something that you would like, a Candos. The Candos chocolates lorry comes and stops in front of the shop. They're supplying chocolates to my shop. I say, hello, I need a stock of chocolates because in my shop all the Candos chocolates have been sold out. Can you bring in 5 boxes of chocolates? They will supply whatever the amount, whatever the stock that I request, they will supply. In exchange for the goods they supply, I have to pay them. That is a transaction. See how resources were exchanged? I got goods. I got goods into my shop and I paid with cash. Goods came in, cash went out. Those are the transactions that we are going to discuss. And the value of the amount of cash I had, what happened? Increased or decreased? Well, when I paid the Candos dealer with cash for the goods they bought, for the goods they brought, supplied to my shop. When I paid with cash, the cash I had in my cashier, in my cash till went out. So the cash amount drops, goes down, reduces. But at the same time, I got goods, 5 boxes of chocolates. That is another asset coming into my business. So the asset of goods increased, asset of cash decreased. Increasing, decreasing. When something is increasing, something else is decreasing. Children, that is how transactions affect the accounting equation. That's what we are going to master. You and me, we are going to master this, right? Whenever somebody says, gives you a transaction, you should be able to, in a minute, in a second, you should be able to identify the effect of that transaction. Ready? Okay. First transaction, transaction number 1, example number 1. This is in your textbook, children. So if you have your textbooks, you can go to this page, page number 60, and do these exercises, do these examples with me. Right? Let's do it. Example number 1, it says, owner invested 800,000 as capital. So owner of the business has invested capital to the business. How much? 800. 800,000. Not 800. 800,000. Which means the owner, let's say I am the owner, right? I'm standing in front of you as the owner of a business, and I bring in cash 800,000 and invest that cash to the business. How does that transaction affect the accounting equation? Let's see. This is the accounting equation, children. I'm going to underline the accounting equation now. Assets equals equity plus liabilities. Accounting equation. When this transaction happens, how does it affect the accounting equation? This transaction. How is this transaction affecting the accounting equation? Now, as you can see, children, under assets, there is cash 800,000, and I'm going to put this symbol plus. And as you can see on the other side, under equity, there is another 800,000. And I'm going to put again this symbol plus. Yeah, so I have put plus mark on that side and plus mark on this side. And don't you have a problem here? Why is 800,000 has increased under assets and under equity too. Why? Why? Maybe few of you understood this already, but for the students who do not understand this, how the 800,000 has increased under assets and under equity too. Why is it on both sides? I'm gonna give you the reason why. Children, these 800,000 which came into the business, these 800,000 came from my pocket because I invested 800,000 from my personal savings or from my bank account or from my pocket. Okay, so some students, most of the students, they think that if 800,000 went from my pocket, sir, how is it increasing? How my equity has how is it increasing? Huh? How do you put a plus mark? Why do you put a plus mark there? You should put a minus mark. Why do you put a plus mark here? That's what students ask. Why do you put a plus mark here, sir? You should put a minus mark. No. Because my money, the money that I had, equity, has gone to the business, 800,000. So the money I had in my accounts or in my bank, the money has decreased, gone down. So it should be minus. No, children, no. The most important thing that you should keep in your head, you should bear in mind, is this. What is it? It is when you do accounting for a business, when you record the effects of transactions, when you record the effects of transactions in a business, when you record the effects of transactions, you are not the owner of the business. You don't consider yourself as the owner. No. You consider yourself as the accountant. You are the accountant. It's not your money which came into the business. It's not your money. It's the owner's money, and the owner is not you. It's not you. Right? It's the owner's money, and the owner is not you. Owner is a different person. He brought in money. In this case, I am the owner. If you consider me as the owner, I invested 800,000 from my pocket or from my bank account, my personal money, and you got it because you are inside the business. You are the accountant. You are doing accounting. You are recording the transactions, and you got that money. So inside the business, assets increased by 800,000, as well as the equity increased, because equity means the money or the resources which invested by the owner. So the money which belongs to me inside the business increased. All right? And that money is an asset to the business. That's why assets plus and equity also plus. Both went up, increased. Both went up, both increased. All right, are you clear now? Very good, very good. Moving down, moving on. Second transaction. Example number 2. Purchased furniture for 100,000. The accounting equation changes as follows. Let's see how the accounting equation changes. First of all, I'm going to underline the transaction here. This is the transaction, example 2. I'm always very concerned about my lines, so I'm taking a straight line from number 2 and I'm underlining the transaction. The transaction is this: purchased furniture for rupees 100,000. And how the accounting equation changes, just like this, how the second transaction changed the accounting equation. Let's see how it changes the accounting equation. All right, so I'm gonna again circle the amount. Purchased furniture for 100,000. Now, I have started this business. I have invested my personal money or cash, 800,000 to the business. So now in the business, there is 800,000 worth of money already. 800,000 or 8 lakhs of cash is in the business. Maybe it's in the business cashier, cash machine, the cash till. The cash till refers to the machine, cash machine, which is used by cashier of the business. You have seen these things, right? So this 800,000 is in that cash machine, cash till, and the business has purchased furniture worth of 100,000. 100,000. Let's see how this transaction affect the accounting equation. How this transaction affect the accounting equation. The equation is here as usual. The equation is given here, so I'm gonna underline using blue color the equation. All right, children, as I told you, the money invested by the owner, 800,000, is already in the business. It's already in the business, right? It is this 800,000. It is already here, 800,000 cash, the money which I invested. Okay, nobody has stolen it. Nobody has taken the money home. It's already remaining in the cash till of the business, 800,000. By using this cash, by using the 800,000, now the business has purchased furniture. Now the business has purchased furniture worth of 100,000. That means, children, the money which is in the cash till, out of that 800,000, 100,000 is spent. 100,000 has gone out. Okay? For that 100,000 of cash spent, 100,000 of furniture has come into the business. It's clear, right? the money which owner invested is there, already there. Out of that 800,000, 100,000 is gone now. 100,000 is spent. And for that 100,000 spent, 100,000 of furniture has come into the business. All right. So that's what they have shown here. In the textbook, that's what they have shown here. See, 100,000 cash decreased. I'll circle this because from this 800,000 cash, 100,000 has been spent. Spent means money gone, money spent, decreasing of money. The cash remaining has decreased. To show that, I will put a minus mark here. But no need of putting a minus mark because children, using brackets means it shows that it is a decreasing. Using brackets in accounting shows that it is a decreasing. Okay? Then you must understand here, 800,000 is already there in the business. 800,000 is already here. Okay? And from this 800,000 only, 100,000 cash was spent. Due to that, 100,000 gone. Now only 700,000 remaining. 700. That's why the textbook has shown you 800,000 remaining cash, and under that 100,000 minus cash. I will put minus mark here, minus cash. $800,000 minus 100,000, 700 is remaining. Clear, right? It's nothing complex. It's nothing hard. But to notice, there is one more entry here that should be noticed. What is this? There's one more entry. And what is this? 100,000. This is the furniture which came into the business. The furniture. For that 100,000 spent, 100,000 worth of furniture came in. That's why under assets, furniture also is shown, because furniture too is an asset. Children, what you have to realize here is, in this type of transaction, on behalf of one asset which decreased, another asset has increased. Or for the same amount which went out, a different asset has come into the business. You got it, right? The total assets value has not changed. Before, 800,000 was here under assets. Okay. Still 800,000 is here under assets. Do you notice that? Right then. That's it. End of story. If you don't understand anything which has happened here, as we move on, these things will be even more in detail taken into consideration. So no worries. I explained this in such a simple manner, I think everybody must have understood. All right. So moving on. We have another example. This is on the same page in the textbook, but I have taken it onto a separate slide. This is example 3. Wait until I underline the transaction. This is the transaction. Obtained a bank loan of 300,000. This is the third transaction we are doing. Obtained a bank loan of 300,000. Now this is the third transaction. The first transaction was owner's investing of money. Owner invested 800,000 into the business. Now you are not the owner, I am the owner. Alright. Keep that in mind. You are the accountants. If you are doing accounting, you are not the owner, you are the accountant. That is the first transaction. And the second transaction was purchasing of furniture. 100,000 was spent and 100,000 worth of furniture bought to the business. Then cash asset decreased, furniture asset increased. Okay. Both effects happened under assets. Okay. Now in the third one, we have business. Business has obtained a loan. Okay. We don't say we have obtained a loan, we say business has obtained a loan. Business has obtained a loan, which means business has taken a bank loan from a bank. 300,000 cash coming into the business. You see the 300,000 coming in. The cash here, which increases the cash amount in the business. Alright. That is why here, children, they have shown you already we have furniture worth of 100,000 and cash worth of 700,000. These amounts, these balances come from the previous transactions. These balances come from the previous transactions. These are the balances. Balances come from the previous transactions, right? Do I need to show you? Balances come from the previous transactions. 700,000 cash remaining in the business. Apart from that, 100,000 furniture is already in the business. Now, in addition to these two assets, another 300,000 borrowed from the bank comes into the business. 300,000 cash coming to the till or cashier, the cash balance of the business. That's why increasing 300,000 is shown under assets. Clear, right? But what you should notice here is this. Not only assets increase by 300,000, as well as assets, liabilities too increase, because this 300,000 was borrowed from the bank. It's a loan, and loans are liabilities. Bank loans are liabilities. All right. Now, coming from the previous session, first of all, the business had cash invested by the owner. So, cash balance was 800,000. And as well as under assets, it was recorded under equity too. So, Notice this, children. Notice. What you should notice here is every single transaction has two effects on the accounting equation. Every single transaction. Now this transaction number 1, it was recorded here. Let's use another color for that. First transaction has two effects. I'm showing you the two effects of every transaction. Two effects are recorded. That means two places, in two places. The amount goes to two places. All right. Okay. This is the first place. And this is the second place. Two places. Okay. Every single transaction is entered twice. Effects are double. Effects are double. Right? Let's take example number 2. Number 2 also has two effects. Two effects, children. This is the effect number 1. This is the effect number 2. Right? Cash decreased by 100, but furniture increased by 100. Two effects. Moving on. This last example that we discussed also has two effects. It also has two effects. 1 and 2. These are coming from the early transactions. These are the balances. Okay, balances are shown always. Balances are always shown, but the effect of balances are always shown. But the effect of transaction number 3 is here. It's here. It's right here. This is the bank loan, and how bank loan has affected the accounting equation. Assets increased by 300,000 because 300,000 cash come into the business, but at the same time, I'll move this way so you can see the bank loan is a liability. Then under liabilities also it increases 300,000. All right, children. I hope you understood all that we discussed today. This is recording the effects of transactions under the accounting equation. And by now, you must bear in mind that every transaction has two entries. You must record two entries under the accounting equation for each and every transaction. Either a increase or decrease, or decrease or increase. If one increases, the other also can increase. Doesn't matter. If one increases, other can decrease. If one decreases, the other can increase, or both can decrease. It doesn't matter. However, two effects must be recorded, or in two places you must enter the transaction amount. That is it for today in this session, children. I hope to see you in the next session, in which we are going to do more exercises on how to record the effects of transactions. So I hope to see you very soon. Thank you for being with me. Thank you.